Hello there, my name is Colin Turner. I want to show you something very interesting on this board for a second. Now, if you're like me, you probably reached a point in your life at one stage where you wanted to have a home, have a house. That's fine. We all do that, that's great. But obviously it's very expensive to have a house, so what do you got to do? You got to go and borrow money to get a house. So here's you, looking for a home, that's what you want. So what you do is you go to the bank, and you borrow money. Let's say, for the sake of argument, 200,000, whatever currency you want. 200,000 is the amount you're looking for, right? Now we're going to assume that you're building a house because you know, even if you're buying a second home, then you're paying for the last guy who paid for the architect, the builder, and all this kind of stuff. So let's just assume you're building a new house for the sake of argument, because it's the same thing. So for 200,000 of this currency, euros or dollars or whatever you like, out of this money, here's you. Out of this money, you're going to pay an estate agent. You're going to pay a lawyer. You're going to pay tax. You're going to pay an architect. You're going to pay a builder to build a house. Most people do. And you're going to pay for furniture and for the stuff that you need in your house, all furnishings, kitchen, and all this kind of stuff. So there you go. And then for all this, you're going to borrow this money, and with this money, you're going to pay all these people with this money for your house. Let's put your house up here. Right, that's lovely. So the point is that you're going to borrow the money. They're going to do that. They're going to give you the money based on your work circumstances. And then after that, you're going to agree to pay this money back to the bank with interest. And of course, you're probably going to maybe pay that over 20 or 30 years. What most people don't realise about mortgages, really immediately obviously, is that you end up paying about double of the figure that you do. So if you borrow 200,000, you eventually pay back 400,000. Okay, but that's most people know that. But what most people don't know about borrowing money from the bank is that the bank did not have this money to lend you. They had a certain amount of money on deposit, and because of a system called the fractional reserve lending system, which is used by both the Bank of England and the Federal Reserve in the US, and most major international banks, they actually will agree to loan money many times more of a percentage than the money that they have on deposit. So for instance, they have money in a vault. If they have like $100 in a vault, they can loan up to 10 times that amount of money. So effectively they're lending money that they don't have, and they're gambling on your future, that you will work to pay back all this money plus interest and plus double, so the bank makes a lot of profit from that. Okay, that's fine, we all know that. Right, but the point is that because the bank doesn't actually have the money to lend you, then it's actually typing this number literally into your account. The bank don't have this money. So by magic and by paperwork, they literally type this number into your account. The bank didn't have that money beforehand, okay? So, you have to think from that, right? That all these people are getting paid to build your pretty horrible house here. All these people are getting paid to do that, and they're all getting paid for this money. But this money did not exist in the first place. It doesn't exist. This money came from nothing. So think about that for a second. So what are you actually paying these people with, really? Because you're not paying them with like gold or silver or anything that's solid. It's paying like literally from numbers on a computer screen, which basically means that all you're actually paying these people with is with confidence, is with belief. It's a whole circle of belief system that this guy and this guy, they all believe that this has value, and therefore they're all happy to work for that, doing that. So effectively, you're paying all these people in confidence, not in actually anything that's real. So the point that I'm making with all this is that I have a group called the Free World Charter, and what we're doing, we're trying to advocate a better society that's without money completely. And you can look that up at freeworldcharter.org. And what we're saying, what we're trying to tell people is that we can actually do everything we do now normally without money completely, because we don't need the number in the middle, we don't need this middle guy at all. We just need each other to help each other out a little bit. I mean, all these guys, relatively do a small amount of work for the amount of money that you're actually paying them. So you're actually paying all these people in confidence. But if we just cut out the middleman altogether, which is just an imaginary number system, literally, if we cut out, we can actually pay each other literally with the confidence and the trust that we have in humanity and in each other. This is all we actually need. So what do you think about that? So if we're promoting a society that doesn't use money at all, and most people think that's just a crazy idea, but actually we're already doing it. We're already doing it here because this money, it doesn't exist. We're already doing all this. So you've got to think about this. This is crazy already. We're paying each other without actually anything real. So our proposal is to have to create a better world that doesn't use money at all, and that actually is based on trust of each other, trust in humanity, realigning ourselves with nature, stop destroying the environment to create profit, etc., etc. Look us up at freeworldcharter.org, and also I'm posting the links for the fractional reserve lending in the description here, so have a look at that. Yeah. So think about it.